On Monday and Tuesday, the prices had pretty much balanced and the ranges overlapped significantly. The low of the 2 days was 1175.25 with a close on Tuesday of 1182.25. The E-mini opened up at 1174.75, which is a decent gap down, and it was potentially out of balance. This is a volume-based candlestick chart, and I've not put any indicators on there so that we can just have a look at the action and try and understand what the type of open was. So if I just play the replay, we can see that initially there's a small move down, followed by a test upwards. Now you can tell it's a test because it's just beyond the little bit of push right on the open, and it's kind of an area I was looking at anyway. Subsequently, the market continued to make lower lows, and each time it moved down you can see there's a flurry of selling activity. You can see this by the speed, obviously because it's volume based. The candles aren't dependent on time to close, they're just dependent on a certain amount of volume trading. So this is probably sort of mid-confidence type opening with a test up and then a push down. Maybe quite confident considering the location. And we can see that the market proceeds to trade lower with some reasonable rotations back of about 2 to 2.5 points a time. Now a low is put in at 1164, and at that point it looks like the initial move is over. But what that does is it says to me that there's confidence to the downside on opening, and later on in the day I should look for another move down. Nothing else changed, and so as we can see in the completed picture of the day, whilst the market did trade back up, later on in the day new lows were made and price closed significantly lower on the day. So that's an example of an open type and how it's useful to gauge the rest of the day. Thanks very much.